After the Bell starts right now.
Day two of a pretty decent rally. Let's get right to today's action. We have Robert Luna, SureVest Wealth Management CEO. He's advising investors to step away from, the general S&P 500 investing in those names and look instead toward emerging markets. He'll say specifically which ones he likes. Yuri Chang, Ace Investment Strategist, Chief Trader, still expecting to see the market go up another 7 to 9%. And Larry Shover, SFG Alternative CIO in the pits of the CME. Larry, we begin with you, day two. And again, some people were saying that this was simply that the market actually believed Vladimir Putin when he says he's not going into the rest of Ukraine. So that story's at an end. We might not believe it, but the market did.
It does. And if you look at all the asset classes, especially the implied volatility, it has just evaporated today. And when you look at the price action behind me today, it has been scrappy. What a strong market, and you cannot keep it down today. And a lot of it is that we're so quick to look through that rear view mirror and realize that we don't have to worry about this until perhaps May when the elections occur. I don't think I believe that, but that's what the market is saying. And right now we're starting to look a lot more towards growth metrics and earnings season, a lot less on Russia and Ukraine. This is a nice bounce back rally, filling in the gap from last Thursday's Russia fall off that we saw.
All right. Well, Robert, I view this as kind of a vision of what the market is right now, because everybody knows that Vladimir Putin, he said it. He has ambitions far beyond Crimea. He has ambitions far beyond even Ukraine, perhaps even to Latvia and the Baltic regions. The point is that the market wants to go higher. The market is propelled to go higher, even if the news is temporary, which I think is what the market is digesting. Not the long-term vision, but the short-term vision. The market is in that short-term climb mode right now, correct?
Oh, yeah, I agree. I mean, it's very hard right now, David, to get bearish about this market. I mean, when you look at a macro picture, interest rates are very low right now. Like you were saying earlier, we virtually have no inflation, and corporate balance sheets are pristine right now. They've been buying back stock, raising dividends. They're in the position for an expanding economy. So it's very hard to get bearish right now.
Hard to get bearish, Yudi, and you are certainly not bearish. Let's talk about the upper range that you're picking here is a 9% gain for stocks, on top of a double-digit percentage last year for the S&P 500. What's really driving your theory here that we can hang on to such decent gains?
Yeah, there's a couple of things, Liz. If you look at basically lack of inflation and lack of a recession, and with a still favorable Fed, the market is poised to go upwards. And plus the fact that there just simply isn't any yield to be had other than the stock market, right? And the history also, Liz, is on our side as well. After a 20% gain year, 84% of times the market went up the following year, and the average gain is about 7% or so. So with all these favorable factors, I think, of course, short-term aberrations, geopolitical risk, the weakness of China, there's a lot of worries. But the market does climb the wall of worries, does it not?
It does indeed. But, Yudi, I want to ask you about China, because you, of all people, have been monitoring it better than most. What do you think about those concerns? What do you think of the slowdown? Is it temporary or long-term?
No, I think the slowdown is long-term. Don't forget, China is going to a systematic change where rather than relying on the so-called exports, they want to come back to a domestic market, right? So there needs to be some kind of pain, a little bit of adjustment period. So we will see their growth, in my opinion, probably slow down a little bit. But a total collapse under that system, I just simply don't think it's going to happen. And I don't think it's going to have an everlasting effect on the world market either. So slowdown problem in China, yes, but I think they will work it through and make it out okay at the end.
Robert, you're looking at other world markets, specifically Indonesia, Vietnam. I mean, what's the best way for a retail investor to get into those areas?
Yeah, well, some of the frontier markets, if you like you said, if you step away from the BRIC countries, there's a lot of opportunity going on right now. And if you're listening to the China story, the Brazil story right now, you would think that all these markets are collapsing, falling out of bed. But the Vietnam ETF, symbol VNM, is up 17% this year. Indonesia is up about 20%.
Let me interrupt you 1 second. We've got
Sure.
Oracle numbers. Adam Shapiro has them.
And that's right. And this is third quarter for them, and its earnings per share is a miss, Liz. 68 cents. Street was expecting 70 cents on revenue of $9.31 billion, just shy of what the Street expected, $9.36 billion. I want to read from the first line of the release. New software licenses and cloud software subscription revenues up 4% to $2.4 billion. Investors will be looking at that, but it's a miss and a miss on both lines. Back to you, Liz.
A miss and a miss, and the stock is reacting negatively to that. Again, we often see that the stock may certainly look bad right off the bat, and then they'll get deeper into the report. But right now, shares down about 6.1% following these results. We just want
By the way, I just want to add the licenses and subscriptions, they were expecting a 5% gain on that. As we just heard from Adam, they got a 4% gain. Of course, there are questions about whether you exclude revenue from newly acquired companies, foreign currency effect, and all that, all those details. But the market apparently has dialed all those in, Liz, and found out that it is a disappointing result.
All right. And as we watch the headlines come in, we will keep people posted. David?
All right. I want to go back to Robert, if I can. You know, everybody's focusing on the Fed right now here in the United States and what we're going to do with our monetary policy. Liz mentioned already that Vietnam and Indonesia are of interest to you. Of course, emerging markets have been doing terribly over the past few months, but perhaps individual countries are doing better. Those two countries use the dollar as their currency, or at least link their own currencies to the dollar, do they not? And does that have anything to do with their success?
Well, I think that's a huge part of it. You hit it right on the head there, David. These currencies are pegged against the dollar, so you're not seeing that big currency risk that we've been seeing with a lot of the emerging markets. And like I mentioned, both of these indexes, the ETFs that you can buy, single country ETFs, are up respectively 17 and 20% year to date. Well, so all emerging markets are not created equal.
Well, I would say, but again, you get excited about those numbers. And Larry Shover, who knows? I mean, after a wonderful year last year here in the U.S., maybe it is time to go overseas. What are you seeing as far as flows are concerned on the floor? Anything moving into emerging markets?
Well, there is, but we have to be very particular on which emerging markets we're talking about. Obviously, we're seeing flows in Taiwan, South Korea. People were interested in Mexico. They love the story, but it's more of a long-term story. Brazil, people have kind of backed out. There's more outflows out of Brazil. The carry trade has been very, very good. But right now, it's been a mix. It's really hard to paint it with a broad brush, as we've talked about before, and I know you know that.
Yudi, we're about to hear what the Fed has in store for us. We expect that they're going to go ahead with their tapering. We don't know exactly how that will affect financial markets, but you think financials, in particular Goldman Sachs and Bank of America, look tempting right now. Why?
Yeah, absolutely, especially for Bank of America. I think basically we're not going to see any surprise with Janet Yellen. She said it herself, right? Unless we have any notable changes, there's steady as she goes, probably $10 billion of tapering per month. I think financial markets, the financials have been doing well under this low interest rate environment, especially we have another stress test coming out results. I think it's going to be fine. And the fact that because of that, these financials might be allowed to raise their dividends. If you look at Citibank, look at Bank of America, their dividend yields at the lowest point in history. If they're allowed to raise their dividend maybe by another 2% or so, they even look better. So I like these financials under this same low-yielding, low-interest rate environment. And I think Goldman is the gold standards of financials, right? And I do like Bank of America for the potentially dividend increase reason.
All right. Goldman and Bank of America are his picks. It's wonderful to have all of you. Robert Luna, Yudi Chang. Larry, we're going to see you in just a minute when the S&P futures do close. Thank you all.
Thanks, guys. Well, there are now more than 1,500 ETFs